Hello everyone, and welcome to Virginia International University's MBA 605 online auditing course. Today we're going to talk about the audit of the acquisition and payment cycle, and that will include a discussion of the test of controls, substantive test of transactions, and accounts payable. What we'll begin with is an identification of the accounts and the classes of transactions that are incorporated into this business function or business cycle. We'll describe the business functions and the related documents and records that are generated as a result of working through this cycle, and we'll talk some about internal control and how we design and perform tests of these controls to determine how much of substantive testing of transactions we want to do. We'll also describe the methodology for designing tests of details of balances for accounts payable. We'll design and perform analytical procedures, and we'll design and perform tests of details of balances for accounts payable. And you'll notice a lot of similarity in between how we're approaching this business cycle and how we're approaching all of the business cycles through our business function or cycle discussions and the text in each of the chapters around these functions. And finally, we'll distinguish the reliability of vendors' invoices, statements, and confirmations of accounts payable as they relate to audit evidence. And so there are three classes of transactions that are involved in the acquisition and payment cycle. The objective in the audit of this cycle is to evaluate whether the accounts affected by the acquisition of goods and services and the cash disbursements for those acquisitions or purchases are fairly presented in accordance with accounting standards. And so again, similar to sales or payroll or any of the other functional areas we'll talk about, we've taken this cycle, this business function, we're designing an audit program, or we're following an audit program around how we test this function or cycle, the controls in this function or cycle, and then the results as they are reflected in the financial statements related to this function or cycle. 10 typical accounts involved in the acquisition and payment cycle are shown in this slide. And you can see we have as with the other functions, we have balance sheet accounts and income statement accounts. The request for goods and services by the client's personnel is the starting point for the cycle, and that's generated generally through the completion of a requisition form. Other business functions involved include the processing of purchase orders, which may be in a procurement department, the receiving of goods and services ordered, which could be anywhere throughout the company depending on where they're delivered, and the recording of that receipt, and then the reconciliation of the liability for the purchase. And this provides, again, some of the examples of the transactions and the accounts that are involved, such as the inventory account when we're buying goods for manufacturing, property, plant, and equipment, if we're buying machinery or property or even office equipment such as computers, desks, and chairs. Leasehold improvements is a good example of this as well. Payments to vendors reflect an increasing use of electronic payment forms such as wire transfers and or ACH or automated clearinghouse payments. And we talked about this with the payroll cycle, if you recall also, is that increasingly electronic transfers are being made rather than paper checks, simply because of the efficiency, the increased cash flow from a supplier standpoint that this represents, and some other factors that have just made this a much more viable option, more desirable than the issuance of actual hard checks that have to be mailed. This gives us an idea of the business functions in the cycle. So we requisition something, it goes to our procurement department who processes a purchase order, which results in goods and services being received, which at that point in time need to prompt the recognition of a liability, which then moves from a recognized liability to an actual expense and the payment of that expense. As we said earlier, a purchase requisition is usually used to request goods and services. The purchase order is a document used to order goods and services from vendors which provide critical information such as the required time, the terms and conditions of the procurement, and other agreed to elements surrounding that purchase. And then the receiving report is a paper or electronic document prepared at the time goods are received, which essentially support the payment of the vendor's invoice. So these are just a few of the related documents and reports related to this business cycle. With respect to recognizing the liability, the vendor invoice is the document received from the vendor, and it shows the amount owed for an acquisition. A debit memo is also a document received from the vendor, and it indicates a reduction in the amount owed to a vendor because of returned goods or an allowance granted. A voucher is commonly used by organizations to establish a formal means of recording and controlling acquisitions, enabling each acquisition to be sequentially numbered and to essentially stand on its own. Then we have this acquisitions transaction file, which is a computer-generated file that includes all acquisition transactions processed by the accounting system for a period, and it contains all information entered into the system and information for each transaction. The acquisitions journal is often referred to as the purchases journal. It is generated from the acquisitions transaction file and includes the vendor name, date, amount, and account classification. The accounts payable master file record records acquisitions, cash disbursements, and returns for each vendor. The accounts payable trial balance includes the amount owed to each vendor or for each invoice or voucher at a point in time. And then finally, the vendor statement is a document prepared monthly by the vendor and indicates the beginning balance, acquisitions, returns and payment to the vendor, and the ending balance. This vendor statement is sent to the customer, who we are presumably auditing, and can be used in the audit as a way of verifying the accounts payable balances listed on the customer's trial balance. So most companies use computer-prepared checks based on information included in the acquisition transaction file when goods and services are received. The cash disbursements transaction file is a computer-generated file that includes all cash disbursement transactions processed by the accounting systems for a period. The cash disbursement journal is a list from the cash disbursements file that includes all transactions for any time period. Right. Test of controls and substantive test of transactions for the acquisition and payment cycle are divided into test of acquisitions and test of payment. The auditor gains an understanding of internal control for the cycle as part of performing risk assessment procedures by studying the client's flowcharts, reviewing control questionnaires, and performing walkthrough tests for transactions. Assessing control risk involves reviewing proper authorization of purchases, separations of duties, and timely recording and independent review of transactions and authorization of payments to vendors. When the auditor intends to rely on controls to support a preliminary control risk assessment below maximum, the auditor performs tests of controls to obtain evidence that controls are operating effectively. As the effectiveness of controls improves and is supported by additional tests of controls, the auditor is able to reduce the substantive testing. And so, again, we need to understand first the internal controls around this cycle, and we get that understanding by studying the client's flowcharts, by reviewing internal control questionnaires that the client provides to us, and literally performing walkthrough tests of exactly how the transactions are processed. We then have to assess our planned control risk, and we use the results of tests aimed at ensuring that purchases are authorized, that this separation of duties exists, that recording of transactions are timely, and that there are independent reviews of transactions as required in the client's policies and procedures, and that all payments are authorized. And these are a few examples of the types of tests over internal controls that we would make in order to get to some control risk assessment, which drives, as you recall, our substantive testing of transactions level. And so after we perform these tests, we identify the key internal controls and weaknesses and assess control we then perform tests of controls to obtain evidence that controls are operating effectively. And all we're saying here is that, okay, well, we understand what the internal controls are, we understand the policies, the practices, and the procedures of the client. Then we test these controls in order to understand whether or not they're really implemented and being executed and achieving the intended results. Adequate controls over acquisitions prevent the unintentional recording of acquisitions that did not occur and are also likely to prevent the client from including fraudulent transactions that partly benefit management. Failure to record the acquisition of goods and services received understates accounts payable and may result in an overstatement of net income and equity. The extent of test of details of many balance sheet and expense accounts depends on the auditor's evaluation of the effectiveness of the internal controls over the accuracy of recorded acquisition transactions. Test of details of certain individual accounts can be reduced if the auditor believes that internal controls are adequate to provide reasonable assurance of correct classification in the acquisitions journal. Because of the importance of tests of controls and substantive tests of transactions for acquisitions and cash disbursements, the use of attribute sampling is common in this audit area. Transactions in this cycle more commonly require significant judgment. The dollar amount of individual transactions in the cycle cover a wide range as a result, auditors commonly segregate large and unusual items and test them on a 100% basis. And so what we're saying there is that, essentially the small dollar purchases we're not going to spend as much time on as we do on the large dollar purchases, and the very large dollar purchases we're going to pull out and individually test to make sure that the company's policies and procedures and controls were followed. Efforts to streamline the purchasing of goods and services include greater emphasis on just-in-time inventories and the use of technologies and e-commerce to transact businesses. And these are all changing, and all aspects of the acquisition and payment cycle are having to change to accommodate these new policies, procedures, and practices. Like accounts receivable, a large number of transactions can affect accounts payable. For this reason, auditors typically set the tolerable misstatement for accounts payable relatively high. And so, in order to assess control risk, auditors must have a thorough understanding of how these controls relate to accounts payable. After assessing control risk, the auditor designs and performs tests of controls and substantive tests of transactions for acquisitions and cash disbursements. And so, again, here we get back to this idea about analytical testing and how important it is. We've seen it in other business cycles, and we see it again here. And so the use of analytical procedures is as important in the acquisition and payment cycle as it is in every other cycle. And so here we see some more examples of the types of analytical procedures that we would perform with respect to the acquisition and payment cycle, and some of the possible misstatements that could occur as a result of what may surface through these analytical procedures. And so you can see that we would compare acquisition-related expense account balances with prior years, and we would want to get an understanding of why there are significant trends or differences. We might review a list of accounts payable for unusual non-vendor and interest-bearing payables, and again, kind of understand, well, why are these on that list? Other analytical procedures might be to compare individual accounts payable with previous years and try to understand why the liability account balance there may be a material difference between that liability account balance, or we may calculate financial ratios such as purchases divided by accounts payable or accounts payable divided by current liabilities, and compare those to the same calculations from prior years or even to competitors in this financial ratio analysis, and get satisfactory answers for where something unusual may be suggested as a result of that test. And so what we're looking for here is to make sure that the accounts payable balance completely and accurately reflects the transactions given the cutoff. And so one way of doing that might be to send a confirmation or sending confirmations to active vendors for which a balance has not been included in the accounts payable list, which is a useful means of searching for omitted amounts. When we do this, this type of confirmation is commonly called a zero balance confirmation. And so because of the emphasis on understatements in liability accounts and out-of-period liability tests are important for these accounts payable balances, and the extent to test for uncovered, unrecorded accounts payable depends heavily on the assessed control risk and the materiality of the potential balance in the account. And as we said earlier, we also have these different tests that we can perform, such as confirmations and what we called earlier zero balance confirmations. So accounts payable cutoff tests are done to determine whether transactions recorded a few days before and after the balance sheet date are included in the correct period. And so here we're looking at the relationship of the cutoff to the physical observation of inventory. So was our inventory count, if we have goods and supplies, was our inventory count conducted properly? We're looking at how were items shipped to us, and based on the terms and conditions of that shipping, such as FOB or free on board, destination versus origin, were the account balances correctly reflected to include the terms and conditions of those two different, very different shipping methods. Auditors should distinguish between vendors' invoices and vendor statements in verifying the amount due to a vendor. Auditors get highly reliable evidence about individual transactions when they examine vendors' invoices and related supporting documents such as receiving reports and purchase orders. The most important distinction between a vendor statement and a confirmation of accounts payable is the source of information. A response to a confirmation is normally sent directly to the CPA's office by the vendor. And this is an example of an accounts payable confirmation request, and you will have seen this already, or you will see this with respect to accounts receivable. It acts as third-party independent verification of accounts payable balances as reported in the year-end or cycle-end accounts payable liability account. And obviously, the sample sizes we choose for accounts payable tests vary considerably depending on many factors, the least of which is not our assessment of internal controls around the acquisition and payment cycle. Statistical testing is less commonly used for the audit of accounts payable than for accounts receivable. And so here we see a few more of the types of audit tests for the acquisition and payment cycle as they relate to the accounts that are being audited within this business cycle. And it's through these audit tests that we get to the goal of, as we see at the bottom of the page, sufficient appropriate evidence to base our determination on. And just a few more of the tests that are performed based on whether they are accounts payable or account acquisition assets, which are again the liability accounts, to get to our appropriate audit, sufficient and appropriate audit evidence. And so this concludes our discussion of the audit of the acquisition and payment cycles, where we talked about test of controls, substantive test of transactions, and accounts payable testing. Again, please go back and read the chapter, make sure you're familiar with it. Don't let this discussion, this brief discussion, substitute as a reading of the chapter, and then you can move on to the practical aspects of this session. And thanks very much.